Hey everyone, we've seen some upside for Bitcoin, but is that going to be the last leg down, or are we looking to move further to the downside? Let's have a look. So, what we're looking at here is from 2 o'clock yesterday, 1 o'clock, 2 o'clock yesterday, we were looking that we were potentially going to come up for a lackluster bounce at the 50% level, the 0.5 Fibonacci that was from the recent retreat. That was for the initial impulse up to from our impulse that created the range that we've been staying in for the last few months. And so we've broken through, we've retested, we thought and considered that we were going to stay below this. There certainly was a lot of energy that pushed through at that 6 o'clock candle in Brisbane time. We came up, we liquidated those highs that we wrote in from Monday, which was interesting to see. Just came smashed through the two that we put, and then just came and liquidated just this last one, just here at 57,900. This is cancelled, as we didn't see the 50% level as a resistance level, despite we didn't see it because we did have a low here which showed that it came up, rested on it as support, and then moved away. Here it fell through, so generally there is the fast down, fast up, or fast up, fast down. Generally we do want to see a steady climb. We want to see it like etching and working hard, because as it works harder, we get to see it mitigates the orders as it goes, which shows that it's got structure. It builds structure when price is tight, like through here. Let's just put so like for instance in this area where price is really tight, even closer to here, price is mitigating each wick. So the body of the candle is filling the most of the candle before the candle it follows, and then you see one move up, which, for instance, this candle at 10 o'clock this morning liquidated all orders underneath these two wicks. These two wicks here, and then moved on to higher prices. So we get to see that within this space, orders are being mitigated, prices being filled, and then it moves along. So let's fill out and open up our Tuesday liquidity bands. So these are the liquidity wicks that I have filled out from the. So if we're to zoom out, prices come down. Essentially, it has come down, come up, fallen away, created a low. There is a high here and then a move downwards, but then higher up. But because this high has not broken any other high, it basically sat under this resistance at this level. This is the high that we are looking at. Then price moves down, forms a low, then it's come up, it's formed this high, we've formed this low, and now we are moving up. So this is where we're currently sitting, and we've just got to work out where it goes from here. So if we look at what is the highest high in this space, up here. Alright, well then what is the most relevant price high. What is the most relevant high in this space? We'd have to say is this is the high. So let's call this the protected high. So while we're in this range, this is the protected high that we are watching. And then once we break here, we are definitely looking at the longs. But because we are below here, this is the low that has created the last low. And there's no other lows. Had this come down lower, then this would be the low, but it is not the case. So this is the low we are watching. So let's put that in. And we'll class that as the protected low. So within this band is where we are watching price to go. And this is where we've been from Friday. Okay, so if we were to look at structure alone, where price is going to go, if we're imagining that it's going to stay within the band, where is it going to find resistance? Well, it's going to find resistance at the top of this wick, the top of this. Let's get rid of that. This is a wick where we've got a move down, come up, rejection, an inside wick, and then a move away. So in here, there is orders placed and stop price targets placed in, which is where people have gone short and where people are going long, and they're looking at taking profit in this area. So that is an area of liquidity. That is a liquidity wick that we are watching for. Then we also have this liquidity wick at 58,250 to 200, 58,200, and we've got the daily liquidity high of 58,450. So really we've got 3 liquidity wicks to watch on the high side. Should we break through all these, then we are looking at challenging this protected high. Not to say that this is a high that we cannot break, because we do eventually hope to break. If we want price to go any higher than 58,800, then it needs to break that protected high. More so, if we are going to go to the low side, we've got wicks here where we've got 56,300, 56,154, 55,387. We've got a low of a move of 55,040, 54,890, and then we've got the low. We've got a low of this wick, a low of this move. So this is an impulse move from Monday yesterday. Oh, sorry. Yeah, Monday yesterday, we're Tuesday, at 11 o'clock. So this is also a daily low. So we can have this as a daily liquidity graph, which gives it just a little bit more weight. You know, that was something that price has moved within this entire impulse. So we've got Sunday's high, and then we've got Monday's low, and then this is also Monday's high. So we can actually change that. We could actually change that to a liquidity graph as well, as a daily liquidity graph. So that gives it, we've got 2 daily highs, we've got 1 daily low, and this protected low is obviously a daily low, which gives it even more weight. So as we move to the outer bands, it becomes thicker with liquidity orders. We move to the low, we are thicker with liquidity orders, plus we are going to challenge this 61, let me start again, we've got the 61% redraw, where we have moved back down to, let's move to a daily again, retracement, not redraw, oh my gosh, let's start again. Alright, so here we've got is the 61% retracement from the impulse that created this high at 73,700, and we've bounced around, we've ebbed and flowed, and we've come back down, we've broken and are testing around the 50% level. Now we're moving down to the 61.8% level, which also has these daily liquidity wicks. And below there, there's one daily liquidity wick, and then we start to fall to the 68.6 level. I'm starting to jump on my words, sorry about that. Alright, so if we were to consider what would be our resistance in this area. So if we were to come out above this protected high, we could imagine that from this protected low to the impulse high, which has created this whole move down, is we've got a 50% level at this impulse, at this retracement. So we've come down, we've retraced, we filled an imbalance, and then we fell away again. So that is an area of resistance. Just below this impulse, at 65,500, we've got 61.8, and then we've got the 78.6, which is much higher up in the space. So if we were to move back down into the 1 hours, into the hourly, actually let's move down into 8 hour. So if we look down in the 8 hour, this 50% level is right up. So from 62,000 to 64,000 is our 50% level, and there is a lot of unmitigated wicks just there. That is something of a real significance. That's going to be an area that we will challenge, and if we manage to break through this protected high, that is definitely a target that we're going to look at. So it's not actually worth worrying about the 61.8 or the 78.6 retracement. So if this price was to impulse down, as it has, and it starts to bounce back up, would it touch here and fall away, or find retracement, or would it move up to the 61.8 and fill all that orders, or would it move higher up to 68.6 and then move down to higher? I think that we've got more chance of it coming up to the 50% level, where there's quite an impulse. This is the most recent impulse from Sunday. Sorry, from Monday, from the 1st of July. So this is from last week. This is our most recent impulse down, and then right here is where we're looking at where we decide to move. So if that's our 50% level, that's going to be an area of significance. So if we were to potentially, let's just have a look and see how things pan out. If we were to do an impulse move, let's get it backwards. If we were to do an impulse move from the current low to this impulse, how does that look? So our 50% level is basically where we're bouncing at, and we reject it off, and now we're coming up to about to retest again. So let's just move into the 1 hours. We'll reset the chart for you to see how things are looking. So this level right here is the 50% retracement of the impulse that created the latest low. And right now we're coming up, we're about to retest it, we failed. We came up to retest it, but we failed and rejected again. So there is so much selling pressure that we do have lows forming, lower highs are forming here. Obviously, we can also argue that we do have higher highs, but the fact that we are rejecting off a level from the impulse is giving me credence to the idea that we are looking to move to the downside. So, with that being said, I am looking at potentially coming up to challenge these and move down to lower prices. So that is my current thesis. Let's just have a quick look at what the indicators that we add for Confluence and see if we can get a bit more information to see if it supports or challenges our thesis. Alright, so let's just delete these lines. We showed that this was showing lower lows, and basically where we pointed, we had, 2 more hours, and then all of a sudden we started to move to the outside. So I guess take everything I say with a grain of salt, because it's not going to mean anything. Jokes. All we can do is respond to what we see. Alright, let's go. So we have got Confluence where we've got lower lows moving up. So we've got lower lows moving up. We've got a high. We've got a low. We've got a higher. Sorry. We've got a high. We've got lower lows. We've got a high. We've got a lower high. Then we've got a higher high. So everything is moving in Confluence with the SMIO, which is pretty confusing the way I just put that. But then on the Awesome Oscillator, what we're seeing is higher lows. So we've got, delete that, we've got higher lows. So we are getting Confluence with low, higher low. It's not really a low, but it's all moving higher. So what we can see is higher low, there's no low, but it is moving higher. We've got Confluence with this one, with the SMIO, we are moving higher, so that's fine. We've got, with the price moving up, we've got Confluence with the SMIO, so there's no divergence, and it's when you see divergence is where we want to start to consider that we may actually start to be moving in a direction before the price actually shows it. So in this instance, we are seeing just on this candle, the 3 o'clock candle, that we are moving lower, but it's 3 minutes old. But let's see if we can break this one, and if we find support here, or whether we're going to find lower prices to fill these liquidity orders, and then we shall just wait and see. Alright, so thanks for tuning in, and we'll speak to you tomorrow. Thanks guys, bye.